the $1 Million Mortgage Experience Podcast. All right, welcome to the podcast. I am here with Jerilyn Shaw. She is a top producer, and when I say top producer, she is funded, I think, 365 units last year, as well as over 232 million in volume. Wow, that was an insane year. She's worked at big lenders like Caliber, but now she runs her own thing, her own business over at C2 Financial. Welcome to the show.
Yeah, thank you, Jon.
Yeah, so awesome to have you here. I always love talking to people who are successful in this business and kind of picking the brain, seeing how maybe our viewers and listeners can relate to it, because everyone's trying to be at the top, but there's usually only room for so many, and they got to put the work in. So glad to have you here.
A lot of work. A lot of work. And last year was a great year to grind, right? So it gave so many more people an opportunity to be top producers. Right. This year's a different story.
Absolutely.
It's tough.
Like when the rubber meets the road, it's like, this is like, the strong will survive only. Yeah. Right. Yeah. So let's go back a little bit. How did you get into the business?
Well, let's see. I think I got into the business around 1995, and my father was a real estate broker when I was growing up. So I was literally sitting open houses at sometimes 13 years old, 14, because my dad was pretty successful. Yeah. And he would have several homes open at the same time. So he'd put me at one, my mom at one, and hey, times it wasn't as scary then, right? And we're talking Escondido Valley Center. So you're not, throwing your kid out to the wolves right there. Yeah. So kind of, been around it my whole life. And actually after I graduated high school, I sold shoes for a while at Nordstrom. Really? Yeah, so that was exciting. But then my dad got me my first job working at an escrow company. Okay. And so I worked at, it was called Continental Escrow. And one of the top escrow officer had a busiest desk, worked for her. So that's where I really learned a lot, because it was great. I've learned all sides, you know. And then I will say, I know I'm aging myself, but we did do it by hand. Oh, I'm sure. Right? Yeah. So
you didn't even have Excel or anything.
Oh, no. Yeah. So the closing statements, like, I am so anal. I think escrow officers hate me now, because I'm like, oh no, change this. I'm very to the penny. My buyers really never have a surprise or in a refinance. So I think that played into my success, right? By giving me that foundation. From there, I went and worked for a lender. Okay. A guy that his name was Dave Walling. It was AccuBank Mortgage back in the day. And my father got me in there, actually. And so he brought me in. I didn't know anything about loans and just kind of learned, watching him. And that seemed to be, going well. I was not originating at that point, just purely, an assistant, being trained. And we went to an event, and another top producer met me at that event and stole me away.
They're like, you're going to be great. So we need you over here.
Yeah, that definitely launched me, because his name was John Bianchi. He now is a top guy over at Loan Depot, I think, right now. But that was, I learned a ton under him. That guy was brilliant. And so we were the Bianchi team, and just threw me to the wolves. Here's a stack of files, right? Everything was paper. Yep. And that was when rates were just starting, right, to go down. Some then, nothing like we just saw. Right. But here's files, so pick it up. Right. And I'd learn by looking at the file. Okay, what's the value? What's this? Can I refi them? How do I qualify them? So he just threw me in. Here you go. I don't remember how many basis points I got. And I just learned and would take it to him. Okay, do I do it this way? But he really made me think. And so that was great. So I really got trained there, and then started training people for him. And, running the office when he was out, and it just went from there. But that was really how I got into the originating side.
Well, you said a name that I'm familiar with too, John Bianchi. So I worked for him for maybe a month.
Okay, where?
Way back at, what was the name of the
North
company?
American Mortgage?
Yes.
That's where I was.
Okay. So North American, one thing I loved about John Bianchi, and it totally resonated with me, was he would give away all of his ideas to all of his team, to anyone at his branch. he'd have these meetings like weekly or monthly. And I remember going to one of the meetings and he just basically told everyone what he was doing and how to be successful. And I think I pulled him aside and he's like, yeah, I go, why did you give away all your secrets? He's like, it's like, no one's going to do it. He's like, right. Or they're not going to outwork me.
Yeah.
But he's like, so I just, I'm hoping that some of them will pick up some of these ideas. They'll go run with it. They'll do it and they'll be successful. But, the chances are most of the time people don't do it. Right. So I love that he was so giving in that way, like that he would just share all of his ideas. I actually tried to have him on my podcast, but I think there was a conflict with the company he worked for or whatever.
Okay, yeah.
But I always admired that guy. If you learn from him, then I can understand now why you did so much business.
Yeah, and that was at the beginning when it was the Bianchi team, literally when it was he and I.
Yeah.
And then another gal came in and then he grew it, I actually ended up leaving there to go do some builder business.
Okay.
So I worked at Wells Fargo for about 30 minutes, okay? And was looking at this, and the builder that I was brought on, it was through a friend that did sales and marketing. They used, the Wells Fargo builder division, but you got to go work here to do this. Okay, right? Because there wasn't a lot of business right at that time. So I went, okay, great. I get all this housing tract, sure. And went, I cannot handle, right, this Wells Fargo. So I approached the builder and said, look, why don't we form a joint venture? Let's do this. So I went to the broker side, right?
Is that when you got into broker side? Okay.
And we formed a joint venture. And at the time, my father and my brother, my dad had stopped doing real estate and they had a mortgage company.
Okay.
So we all got together, did this joint venture, and so it was great. So I had disappeared from San Diego for a while because he was building all in Palm Desert, Coachella, Indio.
Which was booming.
Yeah, so we bought a condo out there, and I did all the originating. I didn't hire anyone, and so I lived out there half the time and just hogged it all, for myself. Which was great. And then the market crashed.
That's
so then it all went, it was like, what was that movie that they did about the crash?
Was it The Big Short?
Yes.
Yes.
Okay, so on the Big Short, literally, with the scene where they're going into driving the neighborhoods in Florida, and I think like the alligator or something comes out of the swimming pool. It was crazy. That's parts of Coachella. Wow. Literally, that's how it looked.
It was like a ghost town.
It was crazy.
Yeah.
So when I saw that movie, I just went, oh my God. It's like, well, it's crazy, right? We all lived it.
Right.
Those of us that were in the business.
There was an insane amount of homes being built. It was crazy.
It was nuts.
They couldn't fill them all.
Yeah.
It was
everybody owned a home.
Everyone,
several.
At least one.
Yeah,
right?
At least one.
Right.
Most owned 2 to 3. And you could fog a mirror. Right?
Yeah.
I'll get you a loan.
It
nothing
was so
down.
It was so easy to do loans back then.
Charge them whatever points you wanted.
Yeah, it was crazy.
I mean, it was those were the best of times.
So you went, they were amazing times. You went through that, and then you went through. Did you ever get out of the business, or did you kind of go into this like
kind
depression?
of? So when the market crashed, right? Everybody, we all lost our butts, right? Because you never thought the party was going to end during that.
Especially when we were really young.
Yeah, young, stupid.
Making tons of money.
Spent. Didn't save a lot. So that I went through some really hard times, through that. So stayed in the business. But then...
What kind of loans did you do when it was slow?
When it was slow?
Private money or did you...
Yeah, no, just the regular conventional, but obviously there wasn't a whole lot to choose from.
Sure.
Right?
The values were depressed.
After we had the implodometer, and we lost everything. I mean, that was nuts.
Yeah.
Remembering just you've got your pipeline, then like, oh crap, this
Not
one crashed.
These guys
now I've got to go over here.
Move all these loans over.
It was wild.
It was way wild.
It was wild, but I remember being in my office, a rep coming in, and it was 80-20, right? And that was the first was a 6-month adjustable. I remember they would qualify them, like on the teaser rate.
Right.
And
like it's not going to go up.
Yeah, I remember we were all sitting there and I go, can you imagine when these all adjust and this, we had this conversation. It was not, long before everything just turned.
Well, I remember the 228s with the 3-year prepay, and I'm like, oh, wait, what are these people going to do? Like, they're going to be forced to pay that higher rate. And then when it all crashed, you're like, none of these people can refinance. None of them can sell. They're underwater. Like it was a nightmare. It was crazy.
It was a nightmare. It was a nightmare. I did some loan mods.
Mm-hmm.
Did some loan mods. Did some short sale negotiating.
Yeah.
Actually, did some short sale negotiating. So did, a variety of different things.
Yeah.
Right.
Just
you had to get along.
To be scrappy, right, and to keep.
Yeah, just to keep plugging away,
making money, right?
Yeah. So then I did take about 3-year hiatus at one point to go work in a family business, which was a totally different field, medical management of workers' comp. So basically doctors, running their schedules and the MAs, the medical assistants. Right. And so they all worked for us. So I basically contracted everyone out and ran all that.
Okay.
So that was definitely a completely different, and so was happy to get out of that. But it was something I committed to because of family to do for a few years.
And then the curse of mortgage brought you back.
It brought me back. It's
like a blessing and a curse. It's like,
yeah.
I've tried to get out of the mortgage business, and it was like, nope, you're in it.
You can't.
You're coming back, a boomerang, back.
You come back in.
And it's been good to us.
It's been good.
Yeah.
It's been good.
We've had some hard, and even right now, it's like the business has changed overnight.
Overnight.
So, you're looking for new things, new ways to do business, new ways to, the great thing is I think at our age, we've learned how to, save probably.
Yes.
and to like make better decisions. You have to go through one crash. And then, not that it's a crash, but it's certainly a halt of a lot of, easy loans, right? Mm-hmm. So now it's like, okay, well, I could take some time off if I wanted to, but it's like, no, there's people that need money. There's opportunity.
There's still deals.
Yeah.
There's still deals out there. So I think right now it's really hard for a lot of retail people.
Yep.
With their rates, those margins. So I think it's a great time to be a broker.
Yep.
I think we'll see more people coming out of retail to the broker side.
Yep.
See us start building that presence, right? Back up again. I'm still amazed that they get as many loans as they do, to be honest. But yeah, right now for people that haven't been in the business that long, haven't been through a downturn, it's going to be a rough ride. Yeah. It's going to be a rough ride. That's why I the last really 3 years, just grind.
Yeah, you're
literally.
Like, I know this isn't going to last forever, so let's just get it. Let's go.
Yep. I said no to most everything. Friends, can you go out? Can you do this? Nope.
Yep.
Nope. All I did really was work, put away, spent too, had fun.
Yeah.
But put away because I'm like, the party will stop. Mm-hmm. And now it's coming to a stop.
Right. Yeah. So speaking of that, like what type of borrowers are you seeing out there? Cash out? Like what type of deals are you looking at?
I had more cash out a couple months ago than I do right now.
When the rates were a little bit lower?
A little bit lower, but I think it's an untapped, market. I think personally, I haven't really been marketing for cash out refis. And I think that definitely there's so many people in a lot of debt where even though the rate is higher,
right?
It's going to make sense.
Yeah, they'll save some money if you consolidate debt or
but I get a lot of people wanting equity lines.
Yep.
Right now, everybody wants a second, and most of us lenders are going, "Oh, great, a second.
I don't make
just
any
as
money
much
on
work.
that.
I don't make any money." Or some you can make a little bit of money, but by the time you pay taxes, you're doing everything. You're really not making anything. But it's about just keeping that client.
Sure.
So
if that's what they need, and that's their, you're there to help them get what they're looking for.
Yeah. So a lot of that, but then the purchases, I've got a whole array of purchases right now. I've got the non-Q, right? Where the DSCR, still doing a lot of those.
So investment properties.
But those are becoming harder to do. They're not really rates. Penciling right now. I'm having a hard time making it work for people.
Yeah, you kind of have to put more down to pencil it.
Yeah.
Which people don't want to do. They don't want to give up their cash right now, right? And but I think I don't know if you're seeing this, but I've seen some people still, like there's just not a lot of inventory still.
Right.
Right? Like, so it's interesting. I think in some areas there's more inventory, but like in San Diego and some places like Southern California, there's not
No,
much.
there's
People don't want to sell their
still-
house and give up that low rate.
Exactly. So that's what are we in what are they calling it? A rate lockdown.
Right.
Right.
Everyone's kind of
And-
like locked up.
Yeah, because I mean, I think I saw some statistic the other day. It was like over 80% of people or something like that had a mortgage rate below, 4.5%. And, you know, the percentage at the 3% and below is a very high percentage as well.
Right.
So if you're going from even a 3.5% rate and now I'm going to move up, but I'm moving up at 6.5 or 7,
Right.
I've got to afford double. Does
Right.
this make sense?
Yeah.
So it's hard. And then some people, I had a client actually just cancel escrow today because he's worried about his job. And he also had his home listed.
Okay.
And, so there went 2 deals,
Two
for that
transactions,
realtor, but he's nervous and he's like, I can't sell. And his payment's still lower because he has a ton of equity, but it's, still looking at that higher payment and what makes sense.
Right.
And then more down payment assistance. So that's definitely coming back, right?
And I think people that have been sitting on the sidelines, right, that haven't been able to buy because there's so many offers on a deal, like cash offers, and the sellers don't even look at people who have down payment assistance.
Right.
But now they're like, well,
They finally have a voice.
yeah. And
So that's good.
And they're
So-
going to make a good offer
Yeah.
maybe. And
Yeah. So
whereas other people are waiting for deals and they're like wanting to
Right.
undercut or something like that. But those ones that are, they're like, finally I can maybe get a house.
yeah, which is
Right.
same like the VA, FHA buyers, right?
Right.
So that's why I try to tell my buyers, oh my God, the rate. Well, if you're going to wait to see if the rates come down, which they will eventually. Are we
Right.
going to see where they were? No, I don't think so.
Probably not.
But you're still you can still ride it down and keep refining it down. But like, look, now you're not going up against 30 people.
True.
In most cases. Hey, there's still some properties that are hot, right? That are still going to go over. They're still going to get, I still have buyers losing out.
Yep.
But I'm like, it's a great time.
Yeah.
There couldn't be a better time to be a buyer, just as long as you can handle that payment.
Right.
And the buy downs, right?
So you're doing some
would be-
buy downs?
Yes.
Yeah, I
I'm doing
imagine.
some buy downs, doing
points.
1 year and 2 year. Because a 1 year is nice. It's not that much.
True.
It's anywhere, if you're figuring like a 550 loan, it's maybe 4,200, 4,500 is all the cost is of the buy down.
That's not bad.
So you're able to get some of this out of the sellers now.
So
So
they're covering it, right?
Yeah.
'Cause, yeah.
Yeah,
They
they're
want to
paying
keep that
it.
price up, and so they're like, "Oh, I'll
Yeah.
kick you back some."
And
Yeah.
it does pencil better, and especially a 2-1 buy down for the buyer versus the price reduction, depending on what's important to that buyer. Some
Sure.
buyers, they don't care about it. It's all about the price, right?
Yep.
I just want a lower basis on
Right.
this thing.
So, do you have realtors, like a group of realtors that send you and feed you business?
Yes.
Is that your main
Yes.
kind of?
Yeah,
Okay.
my main business, I don't market. I do with some realtors, I help them with their Zillow or realtor.com, so I will co-sponsor some of that. But I'm not doing the one, they're following up, a lot of times on that lead because they want to be the first point of contact.
Right.
So doing that, yeah, it's really just referral
That's
business.
good.
I haven't been going consumer direct. I know a lot of loan officers are now, and I think they have a lot of success with that. So that's something I will look at doing. Right now, it's just kind of nice to take a little bit of a deep breath.
You mean work
after
an
the last
8-hour
few
day
years.
instead of
Yeah.
a 15-hour day?
Exactly. Maybe an
Right.
8-hour day. And that's the thing. It's like I'm so busy right now still. Like, sorry I had to be late today.
Yeah, so-
But but there's so much less business.
yeah.
So I'm just as busy in some ways,
Yeah.
right? I'm not working till 3, 4 in the morning anymore.
Right.
The deals are harder. Everything seems like it's got hair on it.
Yeah, because before it was just these low-hanging fruit, right? Like easy refis, and then obviously the purchases were like, if you got a contract, it's going to close.
Yep.
And, so.
Yeah. So it's getting them to qualify with
Right.
these higher rates and the non-QM, some of that's tightening a bit in some ways, right? So seeing some of that. So yeah, it's just tougher.
Yeah.
Just tougher right now.
So being a woman in this business is awesome. And my mother-in-law was amazing at mortgages. And so she kind of reminds me of like your hard work ethic and all that. But, when she started out, she had a little, not a hard time, but like business is predominantly, I guess back then it was predominantly male. And we think of like the banker, you think of this,
right.
60-year-old gray hair dude at a big desk, right? Have you ever faced any kind of like struggle, I guess was that the right word?
I mean, not really that comes to mind, but maybe it's my personality. Mm-hmm. I'm
You're not
more
timid.
Like one of the guys sometimes,
Sure.
So I think it can be beneficial as well because sometimes a client would prefer to work with a woman.
Yeah,
absolutely. But it can maybe, be a detriment as well.
Mm-hmm.
If, so you win some, you lose some.
Right. And then if there's less women in it and you're, one and people do want to work with a woman, you have an advantage in that.
Yeah,
on that side,
then
right?
it's more of an advantage. So I've never really had it be an issue. I've actually probably had it work to my advantage a little more.
That's good. Yeah. I think that it's true that more and more, I mean, we've seen a lot more women enter this business, in the mortgage business. And on the sales side too, where like before it was like wholesale reps were women or, escrow officers were obviously women. You didn't see a lot of male escrow officers occasionally. A lot of real estate agents, kind of both sides, right? Women, a lot of women in real estate and a lot of men too. But I mean, it's great to see, the success that you've had and I'm sure you've had struggles along the way. All of us have. Male, female,
of course.
Doesn't matter. Just you work hard and you break through all that, right?
Yeah, you just got to keep going. Some days I've had a deal go south or a client that just pulled the rug out from under me. You work so hard on a deal, you're giving them a good deal, and then they just blindside you or don't give you the opportunity.
Right.
And it can take the wind out of your sails, right?
Totally, especially when you're only paid on commission.
Yeah,
right?
and so you might, you're down for sometimes a couple days, right? And then you just got to shake it off and...
You gotta have thick skin.
Yeah, you just got to keep going, keep moving forward.
What speaking of tough deals, anything come to mind like a tough deal you did? Like any kind of stories?
There's been a lot.
No, you don't have to name names.
Just
a deal that you were like, God, I got to get this deal done, and
goodness, I've got to think about.
Well, you had one today. You said. Right?
Yeah, that one I've got, but I think I've worked through a lot of the stuff on that deal. That's one where I would say one thing, you got to be creative, right? And you've got to know just how to structure.
Sure.
So, and especially right now in this market is when knowledge is power.
Yep.
And if you're not knowledgeable, right, there's a lot of loan officers out there right now that they're used to, taking it, putting it in.
Just a lower rate,
put it
sure.
in.
DTI is going to work?
Yeah. They're newer in the business, or maybe they've been around, but they've always handed it off and given it to someone else to kind of clean up their mess, right? And if it didn't work out, great, I'm going to the next one. I have enough. So it's just knowing, right, where to take it, what investor, like you guys. You guys have a good niche on your bank statement loans, right? With
multiple options.
I did have actually one tough deal that you guys were able to get done for a client that I had taken. Nope, right? Nobody would do it. But you guys were able to go in and use a different expense factor on a bank statement loan and really pull that down. And they qualified. And I was like, oh, no way. They're not going to be able to do it. They're not going to be able to do it.
Yep.
Well, I
learned.
It out. I went, okay, wow.
Yeah.
So without having to get a CPA letter and doing that, so you've just got to know where to go.
And that's partly the reason why you're an expert is where to take them, right? Like, so if you were newer in the business and you didn't have that experience, you'd be like, oh, I'm going to only go to this one non-QM lender.
Right.
And they, you would know that there's other options in non-QM, that there's different expense factors, different things like that. So I think one of the things that's great is when you have the experience that you have, the wisdom, like knowing that you fight for your clients. So you're going to always go above and beyond, go around, go under, go over, go, whatever way you can to go to bat for your clients, which is a huge thing and probably why you get a lot of repeat business.
Yeah,
right?
Exactly. Well, it's just how you make a lot of the deals work.
Yeah.
You just got to play the game. And
I bet you also, because you're like that, you also get referrals from your clients, like like they'll refer you to their friends and,
yeah.
oh, you have to go to Geralyn because she, you know, when no one else could, you know, she got it done. Or
Yeah.
Yeah.
Lots of client referrals.
Yeah.
Which is great.
That's how it was when I was originator. I was like, my clients would be like, you're the miracle worker.
Yeah.
And I'd be like, no, I just want to get paid. And yeah, I do care, but like, I don't get paid if I don't, you know, all this work will go to nothing if I don't get it done.
Exactly.
Yeah. So it's tough, but, like what kind of approach are you taking? I know you said right now it's still all referrals. You said you might start going direct to consumer. Do you have like any thoughts like going on, like, you know, if the business keeps slowing down, kind of what your next strategy is going to be?
Oh gosh. I mean, probably just getting back out in front of people too.
Yeah.
You know, I'm become a creature of habit. Mm-hmm. So I'm behind my desk most of the time instead of being out networking more. So I would say, you know, be seen, be out there more, even maybe calls once a week. You know,
just get on the phone.
Hey, do you need anything? I've looked at maybe starting to do some of those slide dial calls or the text blasts. You know, I've honestly, I haven't done any of it. I've been so fortunate with my referral business, you know, that I haven't explored doing those different things.
The slide dial, is that where like it just leaves a message? It doesn't call them and just then they get it pops up. I've seen that happen. Like, wait, I didn't think I missed a call, but
it's good. If you don't have time, hey, set that up. Doesn't have to say their name, right? Just, hey, it's me, Colin. Hey, this new product's out. Or if you got a client, hey, 100% financing. This is great now.
Or if you need cash out on second.
Second. Yeah. You guys now have that bank statement second. So
you could use it for that.
That would be awesome.
And it goes to $1 million. So the commission's not small. I mean, you could charge 1.5, 2 points.
I like
borrower
that.
paid. So
I like that.
Yeah.
I like that.
But yeah, like being creative, and I'm sure like, you know, go to probably your old notes where John Bianchi listed all of his ideas. You're like, that would still be relevant. That would
could be. Yeah.
I
got good luck finding those, but yeah, sure.
I tried to get him on because I'm like, you would just sit here and give away all your like origination ideas, because that's what the podcast is kind of about. That like we want to help our brokers, and you know we don't talk much about our products on here or anything like that, but we just want to give ideas on how to be successful, how to originate, so that people in this business can, you know, not just be relying on leads or not relying on, you know, whatever worked in the past, that they can kind of have some new ideas and stuff like that.
And my number one thing I would just say is to know the product.
Yep.
Knowledge and knowing where to go, where to take it. You know, that's the biggest thing.
And then get the word out, right? Like, wave, like, here, hey, this is what we have.
Yeah, because I mean, I'll have deals brought to me. Oh, they turn down, they can't get a loan. I look at it, I'm like, okay, do this, done.
Yep.
I could do it. You know, it's shocking how many loan officers are out there that just don't know.
Right. And then, you know, look at being a broker potentially, right? If you're just a loan officer and you only have so many products.
Oh, absolutely.
And your rates are what they are.
Yes.
And you don't have any other options. Like, look at being a broker, because, you know, a place like C2, they can, you know, really open up your all the tools in your tool belt to give you way more options for your borrower.
Oh, absolutely. Yeah, you'll be like a kid in a candy store. I mean, I remember the first time I got on Loan Stifter, I was like, oh my gosh,
like,
wow,
look
products. At all this stuff.
Yeah.
And so you need somebody to go, okay, no, don't look at that one. Don't look at that one.
I've been down that road.
Look here.
It's a bad road to go down.
Here. Yeah.
Yeah, for sure. So we talked a little bit about, we touched on rates being high. When you talk to your borrowers, like, are they like panicked? Are they like, what? The rate is that like that high? What's experience
yes, some are not, right? The majority, yes, have a little payment shock, but I think it's been out enough in the media. They're starting to hear it a little more now. It's not as big a shock as it was a month ago.
Yep.
Right? And as a consumer, they don't understand. They think, oh, the Fed hiked rates went up. Right. So that's how they're reading it. So now that we've had several of the hikes, now they're going, oh, okay, so fine. However you need it to make sense in your head, I don't care, as long as you know they're up.
Yeah. And
so I just stress to my client, look, let's look at it now. If you can afford the payment, let's look at, you know, hey, nothing's guaranteed. That's what I always say. But hopefully, you know, by fourth quarter next year, there'll be an opportunity, right?
Yeah,
to start getting this down.
Yep, and you can always buy, you know, you buy your house and that's the locked in price. But your rate you can always refi, right?
Yeah.
Like if you think of it, all the people that took advantage the last few years of just, their rate was probably 5 or 4, and then it went down and then down and then down, and
That's crazy.
and now they locked in. And you said like 80% of those people, they're not. I mean, most of them aren't going to do anything. They may end up renting the house out, but like,
Right.
what are you going to do? You can't rent. I mean, rent's up, everything's up.
Everything's up. And
Yeah.
that's the one thing, even though you're buying now, you're locking in at a higher rate,
Yep.
you know what your payment's going to be.
Yep. And
Look
it's not
at the
going to go
rent
up. It's not
and
going to go
what-
over that.
Yeah.
You're
So
s-
look at rent and how that keeps increasing.
Yep.
So you kind of got to bite the bullet. And now you've got an opportunity to get in with no money down and have the seller actually entertain your offer,
True.
right? Where
Right.
they wouldn't before. So this is the other thing. People say, well, I want to wait until rates come down. Okay,
Don't wait,
well, now
yeah.
they're down. But now, instead of maybe 5 people behind you making that offer, now you're back to maybe having 20 or 30.
And you got to pay
because
more.
the rates came down.
Right.
Exactly.
So what would you rather do? Pay more or
Yeah.
pay a little higher rate?
Right.
Which that can lower later.
Exactly.
But your price you paid will never go down.
Right.
Right?
Exactly. And a lot of them are keep going, oh, I'm waiting for the prices to drop. I keep seeing prices dropping. I'm seeing prices dropping. You are in some cases, right? We're seeing some prices come down, but like there's not enough inventory
Yep.
for us to see a drastic decline, in my opinion. Okay.
And you don't have people that need to sell.
Correct.
Like in 08 where you had an adjustable,
Yeah.
right? And it was like, it's
Yeah.
going up.
It's going up, and
And now
those
you can't
margins
fade
were
that.
ugly.
Yeah.
So
It's
yeah.
a different market for sure. And I think, it was a little bit crazy like a year ago, right? It was like,
Yeah.
10% over asking, 20% over. It was like, I remember hearing stuff like 400,000 over asking, cash only,
No contingencies.
no contingencies, no appraisal.
Yeah. I don't
And-
care. You got a cracked slab. It's
Right.
good. I'll take it.
I'll take it. And I mean, people, and I'm guilty of it. I bought a house sight unseen. Like, I mean, literally FaceTimed, in the condo. It was in Nashville. And I'm like, this is a great deal. And I know I can rent it and make money. So I'm like, I'll buy it. But people did that all over, especially like up in Montana and different places. They were just sight unseen, just putting offers on stuff. And then, so now we knew it was crazy during that time, but now
Yeah.
it's like, okay, people can actually buy a house now without,
Yeah.
they can go look
And
at
you
it.
should go do your inspection.
Right.
You should do your due diligence.
Right.
You need to look under the hood, right?
Absolutely.
So it was getting out of control.
Yeah.
It was getting out of control. And then it was, trickle down the agents go to the lender. What? You can't close this in 5 days?
Right.
No, TRID won't let me.
No.
I can't physically close that fast, right?
Right,
So
right.
it just got out of control. And then
Yeah.
a lot of times too, with these agents saying, oh, well, it's all cash deal. I'm going to take the cash. They're not going to close any faster in a lot of cases. We're still
Sure.
able to close in, 8-9 days on a deal and
Right.
people losing out.
Are you still seeing some cash buyers?
Mm-hmm.
Yeah.
Still am?
Because
Yeah.
there's no interest rate tied to that. So.
No.
And with inflation, it's like, might as
Yeah.
well pay cash.
Yeah.
Yeah.
Well, the dollar is getting stronger right now. So,
Yeah, I was just in Tokyo and it was the yen was down, and I've been like thinking, you when you're like just in America, you kind of think, our dollar is going down because inflation, but then you're like, well, the whole world's actually
whole world.
having inflation. So
Yeah.
the dollar's the strongest of all
it's
of
the
them.
strongest.
Yeah.
I mean, I looked at the euro. I haven't looked this week, but I think last week it got as low as 97.
Mm-hmm.
Which
Good time to go to Europe.
I'm
right?
like, I want to go,
Yeah.
right? And the pound, I think it was like a dollar. Well, it was $1.06. I think it's like at 111 right now or something. So,
yeah.
like,
that's
God,
it.
last time I went, it was like $1.40 something.
I remember being like 250, like back when I went, like way long time ago. But yeah, it's a crazy time, but there's always opportunity. That's what I love about like people, especially if you've been in this business a while. It's these things change. These things kind of ebb and flow. There's always going to be opportunity. There's going to be like now there's these new buyers that are really old buyers because they've been looking and sitting on the sidelines, but now they're ready to buy.
Now they're going to come out, those people that re-signed their leases,
Yep.
whatever they did. So we will see more of them come out. So I would say, too, just educating the
Yeah.
agents. So I always tell my agent, look, call me before you're going to make an offer on the property. Let's structure if we want to ask for a buy down, if we,
Right.
because you want to write it in the contract, it's got to specifically state, that part of it is for a buy down. They're
Yep.
just fussy about that. But just knowing how to write it, how to structure the deal or on a listing as well, doing the cross qual.
Right.
Just helping out agents that way, you
Right.
know, just being a resource. Because I've got a lot of agents calling me panicking right now, too.
And they're not making as much because
No,
the
some of
deals
them are starving. And
Right.
some of them have been starving even in a good market where we were all fat and happy.
Yeah, because they couldn't
were
get
starving.
listings.
They couldn't, they couldn't
inventory.
they couldn't get a
Right.
listing and they couldn't get their buyer's offer accepted.
Yeah.
So we've been very fortunate in the lending side.
One good statistic is that 40 to 45% of homes in America have no mortgage on them.
Wow.
So if you think about that with your agents, I haven't talked to an agent since I found out that statistic, but there's a lot of people that don't need to hold on to this low interest rate. They literally just, now's a good time maybe to sell. And so, I mean, I guess you could probably find those lists, right? Like through title companies, like which houses are free and clear, and then maybe, you know, reach out to them to see if they're willing to sell because they don't have any reason not to now. I mean, with the biggest, I think, hurdle for people to sell now is that fixed rate, that low fixed rate.
Yep.
So with 45% of homes free and clear, that could be a good market to go after, right?
That's a big one. I'd like to know what it is in San Diego County in California. Be curious.
Yeah, and I wonder too, with the dollar being strong, is if more foreign buyers are going to come back and start buying again, because that was huge, like in 18, 19. And so it'd be interesting to see, like, are the foreigners coming back in?
I don't know though, because I actually had a guy from Australia, and he's gone completely dark, and he was hot to buy, even wrote an offer, but the exchange rate, it was only 65 cents.
Yeah, so
he's like, I'm getting killed. I can't bring my money over.
Yeah.
So it could
Good
be
point.
a miss on that, because if their money is now worth less over here.
True.
So it depends. If it's here, if the money's already here,
then they would want to keep it here. They would want
keep
to
it
take
here,
back.
invest it.
Yeah, good point. What do you like about non-QM?
I love the non-QM because I feel like I can almost do any deal, not all of it, right? But the bank statement loans, I mean, those are fabulous, you know, for the self-employed, the flexibility.
Do you get a lot of self-employed borrowers?
Tons.
Yeah.
Tons. Yeah.
So it's perfect for them.
Yeah,
right?
it's perfect for them. Flexibility on the expense factor, the DSCR, again, you know, doing those. If they don't have the cash flow on the bank statement income, qualifying them off that. But again, like we said, those have been getting tougher to do.
Because of the DSCR.
Yeah. And then there's been, for a primary, that true, like no doc product that's out there, where it's blank on, like the old days, right? On income and employment.
That one from Change or whatever. Yeah.
So that one, I was actually the first guinea pig at C2 to do that loan.
Really?
And I was like, wow.
It works.
Okay, it works.
Yeah.
I'm going after this thing. And that was crazy. I mean, that was when we were getting the rates on that loan, high 3s to 4s.
Man. Yeah, if you
and
couldn't
now
close those,
they're in high 8s to 9s on that deal today.
I believe it.
At the 80. So, but you know, hey, I'm like, look, you want in?
Yeah.
Pay it in the interest or pay Uncle Sam.
Right.
What's your choice?
I love that selling
you know?
point. Yeah.
So don't cry to me about the interest rate.
Yeah.
You're not
show
paying
your
a bunch
taxes
of
and
income
pay all
tax,
that income tax
know?
then if you don't. Yeah.
So we'll see if one of the, you know, the new 87,000 IRS agents comes knocking or not.
Yeah, I forgot about that. That's going to happen, right? I mean,
it is.
Yeah.
I already have a friend that's getting audited already.
Wow.
And, you know,
Do they have
small
a gun?
business.
I heard
corp.
they carry guns now too.
Oh, yeah. Yeah. So I'm just going, please God, no. But yeah, it's scary, right? For everybody. But it is amazing looking at some of my clients and looking at all this income, right? That comes in, these gross sales. And then it's not cost of goods that's writing everything off. It's expenses they're listing. And it's like, wow. And then they'll show a loss. So God bless them. I hope it works out well.
Just like all those big corporations, right? That do it.
Yes.
They do the same thing. And
yeah.
I like to read every now and then that book, Rich Dad, Poor Dad, because it's just
I haven't read that.
Oh, it's so good. It's assets, liabilities, you know, the whole way, like the school doesn't teach us about money. And it's an amazing book. I'm having my kids read it. They're teenagers. And they're like, "This is boring, Dad." But then they ask me questions like, "How rich is this guy?" And we're like, "Oh, he has about $100 million." Like, okay, I'll keep reading.
All right, he must know what he's talking about.
You must know what he's talking about, yeah. But I say that to say that like a lot of these, like the whole thing with self-employed is the fact that in the tax code you can take your income post expenses, which is it's legal. So it's like, why would you? But I think all of school and college, everything all teaches us mostly to work for somebody. But when you work for C2 and work for yourself, you can have your own,
It's great.
Yeah.
And that's another thing coming from, because I was a broker, obviously. Then I went back to the retail side when I got back in because, right, brokers were bad. We caused the crash.
In 2008, they were so bad.
And that was a W-2 employee and painful, right? And then, they limited all the expenses we could write off and everything after that. So being able to do, and I'm incorporated now, but, you don't have to be. Someone can just do a Schedule C. It's amazing, right? How much more money you will make versus doing it on the W-2.
Yeah. One of the chapters in that book is it's not how much you make, it's how much you keep.
Exactly.
Right?
Exactly.
So I think that's key, and that's another great benefit of being a broker.
Yeah. It's huge.
So yeah, if you're out there and you're listening and you're a retail loan officer, like come to the dark. It's not the dark side. Come to the good side.
Come to the light.
Come to the light. It's great. It's great being a broker, and you have so many options, and it's fun having choices for your borrowers.
Yeah, and it's only going to get better.
And then your referral partners are going to be like, "Wow, I'm going to definitely use you because you get deals done."
Right.
And
well,
you make it happen, and then they get paid, and then.
Well, and one thing, one way I'm selling against retail right now, but it's the truth, is I'll tell my agents, I'm like, look, whether it's me or go to another broker, whatever, but just if you're using cross-country, guaranteed rate, okay? Fairway. And they're going, okay, no, the buyer's maxed out at this price. I go, get a second opinion because they're holding not only your buyer at the back, but you back. So just get another opinion.
Right.
Not saying they're not bad. They're not a good person, and I'm sure they're a great loan officer. But right now in this market, you've got to make sure that your buyer has the most buying power.
Right. So brokers are better.
Brokers are better, 100%. Yeah.
What don't you like about non-QM?
Oh gosh. There's not a whole lot I don't like. I mean, sometimes I guess a little bomb can go off at the end,
Can of worms, I like to say.
Yeah, you go through a little QC at the end and wait a minute. Oh, now we need this. But again, I think that really only has happened to me when I've gone to a lender that I don't use all the time for the non-QM, right?
Yeah.
So I like to go to someone I know working with. I know they're going to close the deal.
Yeah.
I had actually a non-Q deal at a big wholesale lender that also has a retail division. I won't say a name.
Okay.
So I don't want him mad at me. But they came and conditioned me, at the end for this CPA letter, wanting all this stuff when we were already using a 50% expense factor. I'm like, no.
Yeah.
What is this? This is not a non-Q. You guys, I might as well go full doc.
Right.
I can't remember exactly what they were asking me for, but it was something ridiculous. So again, it's like, I'm like, this is not a bank statement loan when you want me to provide this.
Right.
So I think you just got to really be careful. And again, it also comes down to the loan officer because I think it's the guidelines. How anal I'm super anal. That's
your guidelines.
One thing. And or I'll go through it all. Wait, what about this? Will this bomb go off? I had a deal I was screening today with Union Bank. And the guy's selling, a house for $10 million, and we're trying to, back into the reserves and everything we're going to need. And I'm like, well, now wait a minute. Are you guys going to look and go, where's the money to pay the capital gains? I need to know this, right? So you've got to think
foresee
about
it.
So it's just sitting back like in an underwriter mentality. Where's the landmine in this deal?
And that's what helps being experienced.
Mm-hmm.
And then if you're not experienced, you can always team up with somebody who's
Absolutely.
experienced, right? Like you did when you started out. Like
Yes.
You had to. You're like, I'm not going to just go be a lone ranger by myself and do this. I'm gonna team up with someone that knows. And
Absolutely.
and
Team
that
up with
helps.
someone that knows. Let them review the deal, right? So I'd say to somebody,
And
bring
even
me the
let them
deal.
take-
Let me look at it.
Take a piece of it.
Yeah.
Like,
Take a
'cause that
small
way-
percentage, and then I know, or they're there to
They care
catch
about
me
it.
when I fall.
Right. And they
Here.
care about the deal too.
Yeah.
And they want to see your success, and then they know that they're going to get paid. It's a lot of people just want all of the commission, and they don't see that big picture.
Exactly.
Right.
And I mean, I've had a very experienced gal that was a C2, has been with them for a long time, and she was going on vacation or something, and deals blowing up, and can
Help
you
me
fix it? Right.
Mm-hmm.
And so I took it. Okay.
Mm-hmm.
I know how to fix this, got it handled.
Mm-hmm.
And so it's just good, having a network, obviously, of people
That's good.
to bounce it off of.
That's good. What inspires you right now?
Oh gosh, high rates. No. Inspired. Nothing I can in particular say I'm inspired about. I probably need to find some good inspiration.
Well, like when
right
you wake
now.
up in the morning, like you get up, you don't have something that's like, I got to do this. Like I have a inspirational thing that I have to do. You have a mission. You just have like an internal, like you're like the
right now I'm in relaxation mode
Mm-hmm.
a little bit, so I'm kind of enjoying. Right, I hate the business being down. Right, but at the same time I love it.
You're like, I can catch a breath.
I can catch a breath.
Yeah.
So it's like, oh, great. I'm going to go play pickleball. I'm going to, do tennis lesson today. I'm going to do something. So
have a little more balance.
yeah, having more balance, I guess, would be my inspiration right now. But in the back of my mind, I'm going, okay, I've got to get back on track. I've got to get my nose back, down to the grindstone. And I love helping people. Mm-hmm. I love doing mortgages. I also love actually this market. Mm-hmm. I like that the rates are going up.
Well, it takes out all the people that
takes
just
them out.
were here for the fun ride, right?
Yeah, so it's actually a good thing.
Yeah.
So as long as I'm lucky, I put some money away, I'm not panicking.
Yep.
Right? So, and I feel sorry for a lot of people
Sure.
that are panicking, and I'm sad that they can't pay rent,
Right.
they can't make it. But so I'm thankful for that, but it's also that's a great time.
Yeah.
Weeds out the weak.
Mm-hmm.
And the strong will survive. There's enough pie for us all.
Right.
Right. But it's going to get a little smaller.
Mm-hmm.
So again, it's just going out there and getting the business.
Yep. So you did a little shout out to John Bianchi. Anyone else along the way that kind of helped you, whether they're could be a relative, could be anybody, just that you'd shout out to?
That I'd shout out to. Gosh.
Like just someone that gave you kind of mentored, or just anything that kind of helped you along the way.
Yeah. God. I'd say David Walling, who I worked for before John. Those two were definitely crucial, right, in building my business. And then the builder that I worked with.
Awesome.
I would say him. He was a guy named Mickey Riley, and he really changed, right? By us doing that joint venture really launched my career.
That's cool.
Because I gained so much experience, doing that.
That's awesome.
So he was definitely instrumental.
That's cool. So if a realtor's watching and they want to work with you, how do they find you, or anyone that would just want to kind of work with you? Do you have an online presence, or?
Just send me an email at jshawloans@gmail.com.
Awesome.
That would probably be the best way. I'm kind of ghostly online, so that I'm going to work on.
Yeah,
I'm going to get a better online presence.
You probably don't want people to bug you, but like a realtor that wants to work with you because they know you've got you're good at your business, and you always take on another referral partner, right?
Yeah, I would always love it. Love
for sure. Well, cool. Thank you for joining.
Well, thank you. It was fun.
All right, everybody, make sure you like, subscribe, share, reach out to Geralyn if you like, and just thanks for watching. We'll see you on the next podcast.
The $1 Million Mortgage Experience Podcast.